Testing, testing.
Testing, testing.
There we go.
Testing, testing. There we go. Testing, testing. There we go. Testing, testing. There we go.
Okay. All right, testing, testing. Okay, sorry about that. Yeah, first time Streamlabs in a while. But yeah, this should be good to be back. Messing around. Like it's Thanksgiving break technically. I mean, it's technically Friday schedule, but I have class on Friday. But so here I am in Huntsman, Huntsman Hall in the GSR. So very thematically fitting to do a company overview. But yeah, honestly, it's been a while since I've really sat down to look at a company. Or this is very like preliminary stuff, But um, of course, but yeah, today it's yeah, talk about Baidu. Now, personally, I think I've touched on in some previous videos. We talk about some of like the Tencent probably more so, but just real quickly, good to be back. Of course, it needs to be more like one-off things, but yeah, I guess previously we've talked about uh, Walmart, of course. Like yeah, like that was like my one project, right? Was Walmart. But it's like the takeaways from that, like the core thesis points I outlined, like it's not so much an indictment of them as much as like those thesis points, like just are not to say thesis, right? It's just like when you make a stock pitch, like you're not pitching a good company, right? You're pitching a company that's mispriced, and so in that sense, I was incorrect about not incorrect about that, just like the general timeline, but much longer timeline. Um, in that regard. But the same things like, and plus, like doing those synergies and the diversification of business lines, like in the fintech, like something longer lasting, and certainly Walmart doesn't move at the pace of financial disruption, I say, and a firm or even like a Square or something like that, right? So, but yeah, as a side note, just like just as a side note for future video, future just content, because I don't see many people talk about this. Like I actually had no idea until like I stumbled across like my involvement with like the student credit union here, and so like you're gonna see like some of the weeds how like financial institutions actually work and like the very like micro minute like actually processing like an automated cash ACH. I forget what that stands for. ACH. Uh, I made I automated clearing else. Like actually notice but then how like there's like it used to be Fed wire, but now it's gonna be Fed now. Like the Fed is pushing or moving towards like Fed now, which is like instantaneous, which is gonna disrupt. Which is different, right? Because like currently it's like 4 times a day ACHs will be pushed out. Just because like with there's like we have like those big like like Chase Bank, right, or Wells Fargo. And you have like small credit unions and like local banks, and so from that you have to like play to your lowest common denominator. But now like pushing instantaneous, right? Like that's what the Fed's pushing for, and so it'll be. I certainly don't know what the effects of it will be on Square or like a Visa or MasterCard, but it's always good to think about and consider those possibilities, right? Because that's yeah, because I think as the past 2 years have shown, right, those black swan events, like, well, I guess I mean was COVID really that much of a black swan in the sense that, I mean, God, since January, right? Late December. I guess it depends on like your level of exposure, like just like interaction with China. It's like similar for me, if like like and my mom, like Christmas. I remember Christmas break. I remember Christmas break, like heading back to school. My mom was telling me to, like wash hands and all that stuff. So like late December, right? So if you just like aware and just like consumed information, like were aware in that sense, like you would have come across that. Um, but yeah, but still like what like until March, so 3 months to build up. Oh, so not even a black swan, but I mean, like, so I guess that's like when things are out there, like just consider them. So when it comes to like the payment dudes, like fin like not finance because like the banks are, but like the payments industry, or like FS or Fizz, yeah, or Fiserv, right? Like these guys will be under some like might be some like some changes in the market that certainly from like a retail investor. It's like some of like those online forums, right? That there's like no discussion of that. But then again, when you Google uh, Fed now, it's just like some like there's like one like Price Water Cooper's so documents about it. So, but yeah, and I suppose despite effect of Walmart's like check redemption service functionality, let's dive back. But enough of that. But today's topic is, as the Twix stream banner says, um, is Baidu. But like certainly, I think broadly, I think this does tend to be a bad trend of myself. But it's to like when there is a downturn in a company's not the performance of the company, but the share price itself. Right? There's the contrast between. Let me pull up the pad. There's price versus value. This won't show up. Shoot. I wish I could have it on Streamlabs so like it'll record my entire screen instead of just don't judge my bookmarks. The Guardian is only for their football sports reporting. I don't. Yeah, so that's that. Speaking of which, let me book a GSR. Oh yes, yes. If you don't have this is what the belly of the beast of the wonderful Huntsman GSR system looks like. Uh, but there we go. But yeah, there we go. I was saying, notepad. I don't want to. Oh, here we go. Just actually, Google Notes. Google Notes or Google Keep? Okay, it's Keep. Honestly, I have a couple different Google accounts. It's a bit tough to keep them combined. Baidu Twitch. Check if you guys can see it. Baidu Twitch, got it. Yeah, this might be like some cheesy Chamath Polyapatía freaking one pager type shtick. But and more broadly, price versus value. Yeah, I guess certainly there's like that one image on Twitter, right? That's like a spreadsheet of like 20 to 30 companies from like the February peak who have like had their share prices have been halved. Right, and that's a result, right? Of it's certainly it's in some cases, right? Like maybe something has changed with the company, but more broadly, right? It's a function of companies valuations slash comps becoming untenable at a certain point, right? Like if the market's a function of if the market's a voting machine, right? And the votes are determined off a function of buyers and sellers, then at a certain point, right, you will sell. Just as if I ask you to give me your if you have a pair of Adidas sneakers, right? Correct pronunciation. I give $100, maybe that doesn't move the needle. But if I give you $1,000 and you compare that to like the future cash flows, and if you're a if you're a lemonade stand, to use a more practical example, then at a certain point, right, you will give. And so when a company is trading at, I don't know, like, if a company trading at 50 times sales, then I mean, sure, like, I mean, a company can trade at 50 times sales. Like, it's not like, if a company is growing at revenues are growing with like your positive PV projects and all that, like it's organic growth and it's doing 50, like you can trade at 50 times if its growth rate is like organic and sufficient. I'm not sure. I don't want to cite a wrong percentage and to come off as a noob. But like, so this is like, like when people evaluate Tesla, right? It's like just saying that the multiple, just saying that Tesla trades at, like just saying that Tesla trades at a 363 price to earnings ratio, or whatever its EV, its enterprise value to EBITDA ratio is, like that's not a reason to say a company's overvalued, because what if Tesla becomes, right? Because just saying a company, that doesn't make you an investor, doesn't mean that you're right. Just saying that a company's valuation is too high, like that's the first step. That's a part of it, but companies can justify earnings, and so the point is, 50 times sales, does a company warrant that? Potential. A company can warrant 50 times sales. Like theoretically, a company could warrant that. But the thing is, like that is pretty aggressive, right? And so when there are those road bumps, whether from like a company's like MAU, like monthly active users, like not growing or like decreasing, to things like interest rates going up, it's just pretty much the more you go out, right? It's just like right, if you're at the beach, if a company's valuation is a beach, then like the beach, like the ground of the beach itself is, say, like, I don't know, like one times price to book, one times earnings, or whatever, right? And so as you go further out, right, then then there's more things that could go wrong, right? Right, and so in essence, and to go further out, then you want to be compensated more, like your risk. So in that sense, I guess it's very winded. Maybe not the most clear. But I guess like my point is that the storylines that some companies ended up trading at very high multiples because of all of those factors, and as they reach higher and higher points, then justifying this, then a lot more factors can bring those down and create those pressures, and so naturally then they come down as those things affect it. And so, but from there, it's a price versus value, right? So on the upside, going up, price in some sense became detached from inherent value, and on the downward side, price and value can get detached. And so today, in that sense, and on that list, like Baidu, alongside, say, like Alibaba, or I guess it's like two main like Chinese companies on that list, have been caught up in that. And so today, just wanna do a deeper dive, just like 15-20 minutes. This will also be like a walkthrough, I guess, like some of like the very lucky things as a Wharton student to have access to, like CapIQ. I would say Bloomberg, but it's a bit of work to set it up and login. CapIQ, IBIS, World. Yeah, that's about it for pure Wharton. But yeah, and a couple like free stuff. But yeah, I guess the big thing, like I think Baidu just very Nasdaq, Baidu. I feel like Nasdaq.com, like very basic stuff that like it gives a decent rundown of it. As you can see, Well, I will say one thing for Baidu, right? It is listed on Nasdaq, which is nice. Like, for example, like I'm working on a stock pitch for a Quashel, a stock pitch. Actually, and like through work, through like it is, I think it is very, it is actually an interesting company. I personally would like, in the sense that having that like pure play, high margin software, e-commerce ad thing. I think it's interesting, especially when it went from how its valuation. It's now like a $50 billion company, I think, or it's just been destroyed in terms of multiple. Like Hong Kong dollars, but how it literally it's a third of its launch multiple. And so in that sense, very intriguing. But unfortunately, it's like Hong Kong listed, traded over the counter, no liquidity. So like 200 volume, which is a shame. So I can't exposure to that. But that just like reinvigorated my interest. Because like Alibaba, Tencent, like Alibaba, like I own a couple of shares down 40% on some of those, but that's a function of no, but I think the thesis has changed. That's not business history. No, honestly, just like leveraging into, uh, just like recognizing the lesson in how investor sentiment is, right? Because like Alibaba hitting a new low today. So at a certain point, right, like I mean, like sure, it's like hitting resistance. It's like I hate to use that term, technical analysis term, but in a sense that right, but at a certain point though, like your multiple, like if you're trading at like 1 times book value, I don't know, it'd be very tough to find a reason not to buy something at like an actual company that is growing revenues at 1 times book value or 1 times earnings, right? But the book value wasn't the best example. But in that sense, right? So this, but just looking like I think in general, like my China thesis, like Howard Marks's memo, who I got the chance to go to. He visited the Warren School last week. Yeah, last week. Last week, yeah, like good. Yeah, certainly, I guess as a Warren person, but good to listen to. And yeah, I think like this is it's like I suppose cherry picking, right? Because I'm sure like there's like a Stanley Druckenmiller or whomever who takes the opposite side of it, right? But just foreign capital, rule of law, maintain that balance that ever present dichotomy between socialist state and the and then the very fierce and arguably more capitalist cutthroat environment in China than the U.S. But yeah, so it's in essence right. Like I think a lot of like there's the China discount, which is always going to be a discount. I assume just as like emerging markets in general, right? Toss on a discount, but yeah, always a discount. On that, but yeah, I think yeah, personally, I don't agree with some of the things. Very, excuse me, very lazy. Have like a very as if like China's gonna destroy their tech companies, and I think a lot of it's just like very lazy Bloomberg and Wall Street Journal editorializing in the guise of reporting, and so that affects. But that's what a lot of people certainly in like the U.S. market read and get their slant from, and so from that there's that sounds quite pretentious, tbh, but in that sense, right? So as a friend, right? But the way to be even more pretentious, to double down, the way to get outsized returns is to have a differentiated view, and in that regard, this is that. So yeah, yeah, and it's definitely like among like those big tech names. Um, Again, like Nasdaq, so Nasdaq listed ADR. So if you want to go into that realm, definitely in that sense, more accessible. With that liquidity to actually be able to purchase. And Baidu, I think it's interesting with like honestly all of like those like mega cap Chinese tech companies are like such diverse business operations fundamentally, just how much stuff they do. Um, right, like Baidu is well, this is investor relations, right? Always, of course, a bit slanted, right? But always nice to see how forthcoming the company is about stuff. And here, right? So online, like internet company, like pretty much, yeah. It's like internet search. Oh, yeah, it's like Google, right? Like essentially like Google, right? And as we know from Google, Google is probably one of the. I think this can be argued, right? But Google is probably in the history of mankind, probably like top 10 most effective most effective companies that just in terms of just generating cash. It's software business. That's so just like to sell one ad when you're selling like to sell like the revenue you earn the cost the cogs of hosting like your millionth ad on YouTube is is right. It's so marginal, right? That's the beauty of software companies, right? Just like your marginal cost of increasing is so low, and so in that sense, it's like a strong, not a flywheel, but in essence, it just in essence, right? But Google, right, is just such a wonderful uh, company, and right, in terms of that business model, it's very, like it's not like one of those like an industrial or like the old like what Berkshire Hathaway like Berkshire itself was like a textile mill, like a textile mill, right? Not the best business, right? Because like very little free cash flow to use that sacred sacred uh, sacred free cash flow, right? Because you don't have cash that could be freely allocated, but instead has to be reinvested into the business. And so Google, right, software like is one of the companies that do allow for that free cash flow generation. Baidu, right, and of course not analogous, right? Oh, there's a substance, right? They also have R&D on various like long shot projects, like they both do, like self-driving car stuff, and that advertising market share, yeah. Onto IBIS World. This won't be a full breakdown, just because uh, I probably do need to grab lunch. It's soon. A bit hungry. Yeah, IBIS World. I'm not sure how much it costs. Again, through access to your university. But this just does like it's like market research, I suppose, in terms of like those like very macro like trends in industries and whatnot. At least here. But so yeah, Baidu up the chain, like not the hardware of like a Xiaomi or a Huawei, but or Ericsson or Nokia, but actually providing like those things. Here we go. Internet services. I'm not sure what they define market share as, right? Because again, right, this is a distinction between investor relations, right, which now has a bit more of a positive slant. But I'm not sure what like internet services, right? Like that could mean like cloud, like if you host cloud services, right? And so in that I'm not sure. Leading. Search engine, AI, live streaming, advertising down. Mobile R&D. I have to be here like bam. Yeah. Yeah, just like not a conglomerate in essence, but just like, it's very ambitious, right? Just like being more than just their initial core competency, but doing a lot of stuff to break out of that or do more than that. Um, which I guess like Google, Apple, Facebook do the same, but it seems like very uh, present with these Chinese companies, like big ones like Tencent, Alibaba, the payments, mobile. Yeah, I'm not. I'm not sure. Because I don't know. Like, it's just like a right. Because if you add these up, right, like it's only uh, right like 30%, and I'm not sure. Like the rest of the 60. I feel like this definition of internet services a bit limited in that regard, or not the most descriptive, or like the intuitive sense of like it was in essence right. The body's investor relations was focused on like actual search engine, whereas IBIS is like if you click cloud computing to, to hosting to the search engine. So and so in that sense, is much more part of Pi capital, and there's more functionality within this, but honestly, I don't want to make myself seem like a fool, so I will have to do okay here, like computer services software. So from that, right, like Tencent's Weixin, Wei, or oh, that's horrible pronunciation, or a WeChat, right? Like a different thing on that. So, yeah, but definitely IBIS will definitely. I think as this right, just like the pretty like descriptive overview, and it's still like you can qualm about the actual validity of like market share, but if is but John right like general like but in general it is tough to quantify in some senses, and more importantly right it's having the consistency in where you're sourcing the numbers and from which you're making those comparables and in contrasts uh, from that. So as long as like you're evaluating them from the same source instead of like I'll use Baidu market share, say it's like 20% from uh, uh, from uh, from McKinsey, and then I use IBIS for say Tencent, and then for Sina I use Boston Consulting for this. In that sense, right? That doesn't work out. Um, On to Capital IQ, which is pretty helpful. I haven't done as much as I should have, but I think like right, there's like Yahoo Finance, right? Uh, like as someone who doesn't go to university, which offers these like is valid, right? But just in terms of like the metrics provided, CapIQ is way more descriptive in terms of actually providing like like enterprise value to EBITDA, actually providing those ratios, differentiating between the market cap, uh, enterprise value, is 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 nice. Uh, and yeah, it's just a more consolidated descriptive view. That the big thing with this is like the comps. Again, right? Like some of these comps aren't really comps. Like Tencent's not really a comp to Baidu. The same way that but it's at least personally, like, I wouldn't really consider Jingdong to be a comp to Baidu, but they still provide good. But yeah, it does. I suppose it's also like my misunderstanding of certain aspects of the business. But a big thing here. Where is he? Can I get EV to EBITDA? Please, no. Uh, I guess like no. But these comps, I think like for other areas, like I'm sure if I searched, say I look, I feel like if I look up say Walmart, I'll get it'll give me like Target or yeah Costco. So like yeah, I guess like the utility of the comps like does default right. I haven't the customized. Like if I was, I would have like EV enterprise value to EBITDA as a comp. I suppose I could just divide it, but too lazy for that. Right, but this is a comps really helpful. Additionally, these things are more so like holistic, like people that go multiples. Uh, yeah, I'm not fully. I haven't used CapIQ uh, as much as I should have with the access. Luckily, I do have, but pretty nifty. But yeah, probably gonna call it here. But and so this is my full methodology. But I think just however like the tools that you have access to, try to use them. If your public library has access to these things, then yeah, definitely make use of it if you can, because these really are like Yahoo Finance. Like it's fine, right? But it's like they're selling you a product, right? Yahoo Finance Premium, and plus, like these things just like save you so much time and are robust. But yeah, but honestly, Baidu like I guess like the most generic sense is yeah, only 50 million market cap, 50 billion market cap. So it might, but yeah, it's certainly an interesting business, right? Core competency and focus of search engine functionally selling ads, right? Like the joke. I credit this to Matt Levine, who has a wonderful free uh, daily newsletter. Although he tends to take every Friday off these days, is is a joke that like the highest function of humankind is to sell ads, right? Like we get paid big bucks to go to Facebook or Google to optimize the algo. Although that's a bit ironic from someone who's in Wharton, where the highest pursuit is investment banking, and it's prerequisite shenanigans. But in that sense, right, like fundamentally interesting business model, right? There are a lot of things in flux, right? Like within like certain like privacy laws in China, and you know with shenanigans that like Baidu, that like Tencent, Alibaba, Sina, Weibo messed around with, but and then, right, but also very differentiated in terms of like just the sheer range of things that they are pursuing from autonomous vehicles to payments, all those, and more. And that sounds interesting. So definitely like way more like to effectively analyze stuff. Like it takes way more time than like the 20 to 25 minutes I spent. But just as I think that it's helpful to just have that overview of certainly some of the tools that are helpful and some of my ramblings. So thank you for your time and have a wonderful